Hi, this is Zak Mir with the Bulletin Board Heroes here at Vox Markets for Wednesday, the 10th of November. Starting off with our friends at ADBFN. Here we've got a rising trend channel. Just broken that line of resistance there from May. Maybe if you're fussy, you want to see the shares above 80 pence, but above 80 pence and that old September peak on an end-of-day close basis, we should see as high as £1.30 maybe over the next couple of months. The added urgency here, I suppose, is the way that we've gapped higher today. So that normally suggests there is some momentum in the market behind the bulls. On to AfriTin. It's got quite a lot of quality followers at the moment. And here you can see that the shares seem to be ready now to break out of that triangle that they've been in since the end of February. Rather a long wait for the bulls there, but end of day close or a weekly close through 5.5 pence through that rising 200-day moving average, and they should be on their way to a target as high as 8 pence, which is a line of resistance from back in March. Maybe we could see that by the end of the year if we get the usual, or we get the very common Christmas run up for the market. Stock which is looking a little bit more encouraging now, Amur Minerals. Here we've got a situation where the shares have sort of broken that trend line there from back in August. So versus around the 2 pence area, they're also above the 50-day moving average, just below that level. But the view is that at least while we're above that uptrend line from March, around 1.9 pence, the shares could be on their way to the top of that rising trend channel from the early part of this year, as high as 2.7 or 2.8 pence. Maybe over the next 1 to 2 months. But if you're cautious, I suppose you want to see a weekly close through 2.2 pence, giving away some of the initial upside. On to Argo Blockchain, which is always enjoyable as the tussle between the bulls and the bears. Seems slightly unbelievable that the shares are not higher in the range, given where the crypto space is and where Bitcoin in particular is. But that is what we have at the moment. Current situation is that we've broken that line of resistance from September around £1.28, and we are looking for, logically, a retest of September resistance at £1.70, so above around £1.30, £1.28, the 50-day moving average area, £1.70 perhaps on offer over the next 4 to 6 weeks. On to Bezant, which had a placing recently. The shares doing what you'd like to see in the wake of a placing, i.e. staying largely above the placing price. It was 1.3, 0.13, 0.14, something like that. Also bouncing on the 50-day moving average at 0.15. The view is that the longer we stay above 0.15, the greater the chance of a move, maybe by the end of the year, to 0.22 and the 200-day moving average. Overall, we've had that turn there with the break of that falling wedge around 0.14 in the middle of last month. So the shares doing what they should do from a recovery perspective. One of the stars at the moment is Ben's Creek, as I think most in the market waiting for the company to start its production sometime this month, I think from memory it was. The view here is that above what's a sort of classic setup, really above 25 pence, looking for 35 to 40 pence, and that's the upper parallel of that imagined rising trend channel. So we'll see if that is delivered. At the moment, stop loss around the 20 pence level, the floor of that channel, and I think that's just above where the some director buying as well. So 20 pence, the likely support zone in the near term. Good to see DeepVerge gradually starting to stretch ahead after that final bear trap rebound that we had in the middle of last month. So gap higher there and held a gap and then pushed through the 50 and 200-day moving averages. Above the 200-day line, 30 pence looking for, as we have been, at the top of that broadening triangle from back in March up to 43, 44 pence. That could be seen maybe by the end of this year. Upside valid at least while we hold above 28 pence, which is that broken May resistance line. Good news for Emmerson today, and probably the reason why the company was quite keen to speak last month. It was a very solid interview that they gave here on Vox. But the current situation is that we've gapped through the last October resistance at 6.2 pence. The longer we stay above that, the greater the chance of a move towards 8.5 pence, retesting this year's resistance, perhaps by the end of next month. This day, generally, an end-of-day close back below the 200-day line, around 5.8, 5.9 pence, really delaying the upside scenario. On to Powerhouse Energy, which is I said is in focus given all the green activity in my the city of my birth, Glasgow. Here we've got the shares breaking that line of resistance from September at 4.4 pence. Initial target here up to the 200-day line at 5.2, and then after that, obviously, the September peak itself. Best case scenario target here is up towards 9 pence, which is that April resistance line projection, but we'd want to see, I suppose, a weekly close above the 200-day line at 5.25 before penciling in that particular area. Pembridge is next, and here the first signs that the shares are ready to push higher. We've got, we had this situation where they gapped up last month. They've held, actually, they bounced off the gap last month, and have retained support above that level, around 6 pence. What we're waiting for now, though, is a break of, or an end-of-day close, or end-of-week close above the May resistance line at 7 pence. And that could give us quite a sharp push up towards the December resistance line projection, as high as 14 pence over a 2 to 3 month time frame. But quite sort of quietly confident about the shares breaking higher here. Not quite sure if there's any particular reason for the enthusiasm, but there we have it. Sabre Insurance, I don't think I've ever covered this here before, but we've got a bear trap reversal here, narrow bear trap from below October support at £1.87. Breaking that line of resistance from September. Let's see, there's enough momentum now to get the shares up towards post-September resistance at £2.30, maybe by the end of next month. ValiRix performed well last month. We had the break of that resistance line there. The charting worked, which is always something to note. That January resistance line and the 200-day line broken around 24 pence. We had the break of that level and headed up to not only the initial target of 40 pence, but actually exceeded the next target at 60 pence. So looking pretty good there. Current situation is we've had a narrow bear trap to start November just below the October floor, so down to 30 pence. Decent end-of-day close now above the 50-day moving average could be enough to get the shares back up to the low to mid-40s, and then after that we can take a view, but looking rather better now after today's price action. That's it from me today. More updates tomorrow.